Friends, welcome. So, last session we are discussing about the goal or objectives of financial management. So, two types of objectives we have discussed. One is profit maximization, second is wealth maximization. Wealth maximization means maximizing the wealth of the shareholders, whereas profit maximization means maximizing or increasing the profit. Okay, so goal of wealth maximization is a better objective. So if a question is asked, what is the objective of financial management? I will suggest first you should write about wealth maximization, then you write about profit maximization objective. Okay, profit is essential, but focus should be given more on wealth maximization. So now going to share my screen. Let us launch some other concepts. Just give me all these things you have discussed in earlier classes. Yeah, after this we have discussed. Now we are talking about this concept. Conflict of interest between stakeholders. Who are the stakeholders? Anyone who is associated with the company or associated with the business is a stakeholder. So who is associated? Employees, suppliers, customers, government, bank, all of them is referred to as stakeholders. And they have different kind of interests. For example, an employee will be willing to have uh, maximum salary, maximum bonus. But the owner would like to have maximize the profit. So you see, both are contradictory. If you pay more salary, profit will be less. Is it not? Similarly, customer will definitely want that price should be less. But the owners of the business, they would like their profit should be again maximum. So if you reduce the price, profit cannot be maximum. So this type of conflicts may come. This is called as a conflict of interest between stakeholders. Okay, so in fact, this is a condition in which the different stakeholders have incompatible goals. And it is one of the major role of the finance manager and other business managers also to ensure that all the stakeholders are satisfied to the extent possible. The goals needs to be aligned so that all the stakeholders will be satisfied. Of course, this conflict of interest is a problem. It is a problem for the company. It's a problem for every business, which affects the performance and affects the success. But that has to be taken care of. Business managers are expected to take care of this. Okay, I think you have understood what is the conflict. These conflicts needs to be effectively managed so that all the stakeholders' interests are taken care of. Okay, that means it is a balancing act. One has to balance. So here I'm showing you some potential areas of conflict. You can have a look at this. Suppose the business decision is to cut jobs to reduce cost. Who will be happy with that decision? Or who will likely to be supported? Let us say shareholders or banks will be happy because profit will be more, but employees will be unhappy. They will be opposed. Similarly, another example, let us say, this is add extra shifts to increase factory capacity. We are planning to add an extra shift. Work will be more. So management, customers, and suppliers will be happy. Local community may be unhappy. Another decision is that introduce new machinery to replace the manual work. Customers, shareholders will be happy. Employees may be unhappy that they may lose the job. One more decision you see, increase selling prices significantly to improve profit margin. Shareholders or management will be happy, but consumers will be unhappy. So you see, these are the potential areas of conflict. Whenever a business decision is taken, there are some stakeholders who will be supporting it. Some stakeholders will be opposing. That is called as the conflict. Okay, so this has to be addressed through financial management. so that is every stakeholder should be reasonably happy. If you look at your syllabus, there is one more concept, that is changing financial environment. So let us understand what is this financial environment. It refers to all the financial institutions, financial markets, laws, regulations, all these things that affects the working of a company as a whole. So business is affected by all these things. This is affected by the financial institution like banks, stock market. It is affected by the laws and regulations. Let us say tax laws. Okay, maybe in company laws. So business is affected by them. So that is called as the financial environment, financial market. That is also component of financial, and it keeps on changing. They are very dynamic. So finance manager has to take care that how to address the changing situation. Every time, these are some examples of changes you see. Let us say earlier GST was not there. Since 2017, GST law is implemented. Similarly, tax laws, income tax law continuously changing. Our accounting principles, that means rules and regulations, accounting framework, that also keeps on changing. Priorities of the government so far as imports and exports, that also keeps on changing. So all these things are for dynamic. It keeps on changing quite frequently. If that is so, as a finance manager, it is his responsibility to ensure that these changes are addressed properly so that each stakeholder is satisfied. Okay, so I think you have understood this concept, what is this changing financial environment, and what is the role of the finance manager. Finance manager's role is to address the situation. Then one more concept is there in the syllabus, that is emerging challenges faced by finance managers. So challenges are many. This list shows only 7 numbers. You may add many new challenges to it. First challenge is to managing cash flows. So in every business, there will be cash inflows and cash outflows. So finance manager has to see that they are properly matched. Suppose there is a tax, there is a liability for cash outflow. So cash inflows should match with them. So for money should be there so that outflows can be matched. That is the first challenge. Second is not having a plan for using the budget. Many times that is a challenge. There are proper planning to execute the budget. That also should be there. If that is not there, that becomes a big challenge for the finance manager. Sometimes in some departments, they may be asking something beyond budget in some emergency situation. Managing that thing is a big challenge. Third challenge is that not raising enough capital. Business needs capital. If capital is not there, it will affect the process. So managing and ensuring that the proper capital structure, that means if debt is required, debt should be there. Sufficient equity should be there. So that management is one more challenge. Too much of debt is one more challenge. Too much of debt means too much of fixed commitment. You have to pay interest, whether you are incurring profit or losses. Doesn't matter. In spite of that, you have to meet your debt obligation. So that is one more challenge. Not having proper reporting is one more challenge. Your accounting reports or other internal reports, if they are not proper, then that will be affecting the finance manager's decision. Decision cannot be proper. Right? So this is one more challenge. Poor tax compliance. Suppose GST is not properly paid, income tax is not properly paid. So this poor tax compliances invites penalties. Okay. That is one more aspect. That is one more aspect that has to be taken care of. Just a minute. Okay. Then you can have next is not paying bills in time. That means poor payment habit. That is also going to affect the business. That is also going to affect the business in the sense that your suppliers may be unhappy. So they may not neglect your suppliers, which may affect the production process. So these are the challenges which are going to be faced by finance manager. So with this friend, one more thing, just I'll show you something. It is not exactly there in the syllabus, then what is the role of finance manager or CFO? So this is the list of roles. You can have a look. The financial analysis and planning, investment decision, you know that financing or capital structure decision, then management of financial resources, risk management, profit planning, understanding the capital market, decision about outsourcing, overseeing other functions, strategic planning, budgeting, forecasting, managing merger and acquisition, and regulatory compliances. All these are the roles of finance manager or CFO or chief finance officer. So with this, friends, we have completed our first unit of your syllabus. We'll stop here today. Next session, we'll be starting with your unit 2. Thank you.